Money laundering is the process of attempting to conceal the source of illicit or ill-gotten gains. The thing that people may not appreciate is that money laundering really threatens the safety and soundness of the U.S. financial services industry, because if we look at the events of the Arab Spring and some of the dictators that were deposed during that time, there's a lot of money that's still missing in the billions. And if you have a lot of money, if you're a wealthy individual, you want to make sure that money is somewhere safe and in a banking system that's fluid. And so I think it's crucial that the United States, United Kingdom, and other, London, New York, other major banking centers do a good job of protecting the financial services industry from being tainted with being complicit in helping facilitate the flow of corrupt funds out of these governments that really, in these countries that really need that money to invest in infrastructure. And so, money laundering has a number of negative effects on emerging economies. What is the difference between bank fraud and money laundering? We argue this frequently within my company and within industry professionals. Bank fraud, whether it's first-party or third-party fraud, is someone is, generally misappropriating assets or funds either directly from the bank or from an individual whom has an account with a financial institution. That's the general definition of bank fraud. Within money laundering, it's more of some type of specified unlawful activity has occurred, like bank fraud, and now I'm using a combination of placement, layering, and integration to obfuscate the source of how I got that money and make it appear as if it's legitimate. But I think it's interesting, more often than not, if you look at indictments and a lot of high-profile cases, it's a combination. One very rarely happens without the other, whether it's the Madoff Ponzi schemes or Sanford or Rothstein. There was a Ponzi scheme, but there was a lot of money laundering going on to try to hide how monies were dispersed. Are banks doing all they can with technology to close the gaps? I think absolutely, but the thing that's the most interesting to me is why. Because we have a fraud advisory board at our company of some of our largest customers, four of whom are four of the 10 largest banks in the world. And the thing that's really interesting to me is they manage their fraud losses pretty well. The banking industry is probably more mature than some of the other industries at managing their fraud risks. But what they're really most concerned with is customer experience, because they don't want to imposition you and contact you or embarrass you if you're having an important dinner in a foreign country and have them deny those charges and embarrass you with business associates, for example. So it's interesting what drives them to be more efficient and more effective is not always just the fraud loss, because they'll eat a lot of fraud losses, particularly for wealthy clients or some business clients, and those clients may never know that they've been compromised, right? So it's interesting. They do a really good job. I do think they are very good at exploiting new technologies. One of the things that we've been introducing to one of our clients is being able to use social media analysis to look at how policies affect customer satisfaction. So again, I think it's interesting in the banking industry, it's not always just about ratcheting down your fraud losses. More importantly, how can I improve my customer experience so I have to call fewer people but still attain that same fraud loss number?